This content is for informational and educational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, or other advice. Nothing contained here constitutes a solicitation, recommendation, endorsement, or offer to buy or sell any securities or other financial instruments whatsoever by Draper Gorin Blockchain, aka DGB, the presenter, or other associated parties for the content being provided. Please do your own due diligence and seek proper counsel.
Boom. Alon's not here this morning. It's just me. If you're watching this morning, you're watching because you're tired of watching the politics and what's going on. And we're going to be interesting to see what happens. But guess what? No matter who's elected tomorrow or today, and we probably won't know for another month, be my guess, crypto's probably not going away. And as far as I'm concerned, Bitcoin's probably here to stay. Just depends on who's going to be using it. So anyways, today, what I thought, I'm a little under the weather. Alon's not here. So I thought we talked about a little bit of crypto and DeFi. My favorite subject. Why? Because I'm the only one here to talk. So I get to pick what we're going to talk about. But because of that, I think we get to see a lot of fun stuff today. So first off, what I'm going to do is I'm going to share my screen. And then we're going to go into some of this various things that I look at in the world of crypto. So give me 1 second as I share the screen. And we are going to share the entire screen and boom, bada, bang. So let me just make this visible so everybody can see. And we are going to add this to the stage. Sorry, I thought I had that planned out a little bit better. All right. So I have a couple different things here. First of all, ETH to BTC. So I love liquidity pools. We will go a little bit into what liquidity pools are. Bitcoin last week, we were in the $70,000 range, and we have since dropped down. Let me actually bring up that as a separate chart. Actually, we have it right over here. Bitcoin right now is back at 70,000. So we're actually good. We were at 68, 69. We are back. You probably can't even see that. But Bitcoin is back to 70,000. I like to see that. We are still down from the high. So if we were to click on this, we will see. Actually, looks like we're pretty close. We're floating right there between 69 and 70. If we go out for the 1 month, we will see we had hit a high over here at the 72, 73, and we're back down. So one of the things I like to look at, because I'm heavy in the DeFi space, especially in Ethereum, is this chart called ETH to BTC. And so as we can see that we've had BTC has been fairly strong. And despite all the L2s that have been coming onto Ethereum, we can still see that the Ethereum has actually been fairly weak in comparison to BTC. And we can see that by this dropping off right here. So we'll see if that picks back up. Those in ETH are looking forward to that. But I think things like Solana and stuff like that have taken a lot of the momentum out of those. And if we go look over here, Solana is number 5 now in the order of market cap. And so Solana has taken away some of the jazz excitement from Ethereum. Ethereum is still number 2, right there, the 24.57 right now. But it's just not performing as well as obviously as Bitcoin has in this game. So I mentioned some of the stuff with DeFi. There's a couple different things. First, let me touch on some things that DGB is doing, right, that we're working with. One of the companies we're working with is a game called Turf. Turf is an awesome company. Turf is basically working to facilitate gaming competitions. So if you're a gaming company and you're wanting to host a gaming competition, talk to Turf. Turf.gg is a website. And Turf allows you to basically facilitate that gaming competition, and they drive it. Now, what's also fascinating that Turf is doing is Turf is basically allowing they're building out a predictions market for gaming, right? So let's say you have a football game or a sports game, an esports game, right? This is better. you have an esports game and you want competition and you want to bet across or placing, a bet. No, right now there's no currency, no money being traded. It's mostly just a platform token, but it stays within the platform. But let's say you want to bet against two parties, then you would be able to bet in regards to which side is going to win. So it's fascinating. It's still early on. Right now it's still in beta. But anyways, take a look at it, look into it further. Another one of the companies that we're looking at that we are invested in is Bima Money. If you want to learn more about Bima, go take a look at their site, bima.money. One of the things that I think is going to be fascinating in this cycle is last year, the last crypto cycle, it was really all about DeFi on top of Ethereum, right? And what's going to be interesting about this cycle is that we are going to see more people looking at DeFi and other aspects of how to use Bitcoin. I'm hearing news right now that Cardano is somehow thinking about working with as an L2 to Bitcoin. And a lot of this kicked off with the L2s on top of Ethereum. So I'm going to go look over here. I'm going to do an account real quick. This is just I don't do crypto on, let's see, we're going to open an account real quick. Give me 1 second. All right, I'm sorry. I just realized I removed myself and then took off the audio. All right, so I'm back. We're showing you DBank, right? And DBank is basically something that allows you to look at wallets. Brought you to the website. We are looking at a wallet that was presented on the front page. And what I use DBank for, not only do I use it to follow my own wallets, but we also look at other wallets. What's interesting about the crypto space, especially on Ethereum, is we are entering into the world of a surveillance economy. You might not realize it if you're on social media, but most of your data is being tracked, right? This just takes it to a whole nother level. And so it's very fascinating because within here, you can actually communicate with other wallets. You can actually have chats. So like right here, you have these people saying hi. And once you start utilizing the wallet, people can send messages and you can see messages of people you follow. So, all right, I'm not logged in because I've never used this account on here. Let me just do a sample. I'm just going to log in to start. We're going to connect the MetaMask account. This is the account I created for this. Say confirm. Verify the address. All right, I'm going to verify the address real quick. I'm not a bot. All right, address is verified. All right, always good practice. Look at that. All right, so I'm not going to mint my ID. This is just a test demo. But what's cool now is I can look at this guy and I can actually follow him. So if I'm going to follow this guy, I'm going to click follow. And now if I go to, the action cannot be done. Your address is detected with potential spam risk. Interesting. Okay. So I can't apparently follow. But we can maybe see some questions he answered. It looks like he answered some questions. So here's a sample in the chat. This person has actually responded to a couple people. Okay. What's fascinating is I can see these are most of these are L2s. So if we unfold these chains, a lot of these are L2s. Some of them are L1s, like Avalanche is an L1. Polygon used to kind of be an L1, but it was supposed to be like an L2, and now it is an L2. But it does have its own token. Most L2s will utilize ETH as their gas and then actually write back to the Ethereum chain. The updates to Polygon are supposed to be doing that. So we have all of these various chains. If you look at this, there's a lot of chains that are interacting with Ethereum or are EVM compatible now. So there's a couple things I like to look here. One, I can look to see the NFTs that the individual's holding. Maybe this person doesn't have any. Looks like they are still loading. Yep, this person has NFTs. It'll show some profit and loss and what their average price is. We can click here on transactions and actually look at the transaction history of what they've done. What we can actually do is we can actually select a specific chain as well. And by selecting the specific chain, you can actually go through and see what trades. So this person recently did an approval of WBTC for CowSwap. It doesn't look like they actually traded anything. They just did the approval. Okay. So we can basically see what this wallet's doing. And you can see what the wallet's holding, right? Obviously, none of this is a recommendation or endorsement for any of these assets. We are just simply looking at a wallet. But then what also I'd like to show is what else you can also see. You can see what protocols people are using. So I'm giving you an in-depth look at DeFi and what people are using. So this person right here has cow token staked over in CowSwap. And they have a claimable amount. Now, what's really cool is I actually own some of this cow token. I did not realize, sorry, apologies, a little bit cold. I didn't realize that this person, this individual, I didn't realize that you could actually stake it in the protocol. Now, obviously, this is not an endorsement or recommendation because you need to know the laws and what your due diligence in regards to staking. Some countries will allow you to do it. You should know that and abide by the laws. But anyways, we can look through and we can see the different things. Now, what's interesting is you can go click on this Stargate and go, okay, well, what is Stargate? And then it'll bring up Stargate and it'll show you the website address and it'll show you the various information. So now realize this person has $227,000. Not all people. You want to be careful and cautious as to what wallets you're following because what might be good for somebody who has $10 million might not be good for somebody else who only has 10,000 or 1,000. We can see that this person is actually following other people. So they have 13,000 followers and they're following 732 people. So let's go click on that. We can see who else they're following. This person also has their account associated with a Twitter account. Now, I personally don't recommend that just because that invades in privacy. So you get into this and all of a sudden, I don't know if that didn't bring it up. I thought it might. Usually that does. Let's see. No. Okay. Maybe it didn't. I thought that would bring up the person's Twitter account, but maybe it didn't. Okay. So, anyways, we can see who they're following. It's not showing us their history. And maybe that's because I created this new account. Interesting. Okay. If we were able to do that, we would be able to see. Now, what we can do, one of the other things we can also do is we can go look at some of these tokens. So look, we can click on Badger. And if we click on Badger, it'll actually bring up other holders who are holding this token, right? These right here are liquidity pools that are storing this token. This is the Badger protocol that's actually storing it. You can see how much is being stored at each of these locations. And then these are all just other random addresses that are holding the token. Multi-sig. So you can really do a kind of a deep dive as to who has such tokens. It looks like we may have a few comments. Okay, now you can hear me. Sweet. Okay. So let's see if I can see anybody. I don't really want to print them to any wallets. I don't know any of these wallets per se. It's Kraken. Okay, this guy has a name, so let's go click on his. Don't know who this person is, but now that we can look at somebody else's wallet. Okay. So, and unfortunately, every wallet has a wallet address. This is the scary part: is once you know a person's wallet address, you essentially know their wallet, right? Privacy kind of goes out the window. Now, the one thing I want you to be aware of and be cautious of, especially if you're in an NFT space, so this might be a person's NFT, right? Well, the thing is everything can be traced back, right? So here's Hedgie, right? We could go over here. I know that's not what I want to do. I'm going to click on Hedgie. Let's see. Well, okay, let's show this a different way. I think this is the project right here. This is an Ethereum project. We'll go to OpenSea. We're just going to show how much an invasion of privacy this is. This should be the Hedgie project. Yep, there's Hedgies. Excuse me. All right. So we see these Hedgies. We could go through the effort of finding his Hedgie, this person's Hedgie, right? And through their NFT. Now, I'm not going to do that right now, but what I'm going to show you is how scary this is. You know, we can click on an NFT simply, and just by going up here, we can actually go and click on the person who owns the NFT. By clicking the person who owns the NFT, we can actually copy the address of this individual, and then we can actually post that address up here. And people will say this is an invasion of privacy, but remember they are on a public blockchain, which brings up an interesting point. The government always says, "Oh my God, crypto is used for money laundering," which, in my opinion, you got to be kind of foolish because everything's recorded on a public blockchain. So, you know, quite frankly, if the IRS or the government or somebody wants to know your bank information, they have to provide a search warrant to a bank. Guess what? In the crypto space, they don't have to do that. Why? Because it's all public. All they have to do is know an address. And then what they have to do is just simply go and say, hey, look at the transaction history. Has this individual ever sent a deposit into Coinbase or Kraken or other? So this sent a deposit into Binance. And so by sending a deposit to Binance, now we simply have to go to Binance and say, hey, have you ever received funds from this wallet address? So anyways, that's where I think things are going with that. Now this is fascinating. We see this Uniswap V3. I really love Uniswap V3 NFTs. This one is Pepe Rapti. And there's an ID on here. All right, so now what I'm going to do, I'm just going to remember that ID for 502362. We're going to go to Uniswap pools. I apologize. I currently do have a cold right now. Debating about canceling the show, but why would we want to do that? So Uniswap, uniswap.org. All right. So we're going to teach you a little thing about liquidity pools. All right. This right here, Uniswap is a decentralized exchange. A DEX is what we call them. If you are on Coinbase, that's a centralized exchange. So the difference is you know, on a centralized exchange, it's controlled and owned by a company, and they're utilizing people's liquidity to facilitate the trade through the order book, right? Well, in a decentralized market, people have to provide liquidity. So let's say somebody wanted Bitcoin exposure. WBTC is Bitcoin, wrapped Bitcoin, minted by BitGo, through it by institutions. And let's say you're going to trade 1 ETH for some Bitcoin and you would get 0.035, all right? Um, well, how does that liquidity get there? That liquidity gets there by people who are depositing crypto into Uniswap. Now, granted, there may be FinCEN rules and other issues with this down the road. So neither this is financial, legal, or tax advice. Do your own due diligence and talk to your counsel. But one of the things, so that being said, they have pools, right? That's fine. L2. Uniswap is actually getting ready to do their own L2 for liquidity. I'm going to dismiss this right now. So this is a pool. This is where liquidity positions. This is how you would create one. So let's say you want to do ETH and Bitcoin. You would basically go and ETH and WBTC. You would click the WBTC. You would specify your tier range. This pink area is the depth of liquidity. This is where all the liquidity is currently parked. So you can see that people aren't really willing to trade that much ETH or wrap Bitcoin at this point. Most of the liquidity is up at this point, at this range, at 0.06. So I'm hoping we get back to this range at some point. But what you would do is if the bar right here that you see is on the left side of this blue line, you are 100% ETH. So you would enter your ETH here for providing liquidity. If you're going to be, if the bar is in the middle somewhere, you're going to provide a percentage of both. This liquidity pool is called a concentrated liquidity pool. And what that means is essentially it is only earning fees when this bar right here is trading, which is in between. So if we were here right now, this pool would be collecting fees. But because it's out on the left side of it, there would be no fees generated right now until it enters back into the line. If the bar is on the right side, the exposure is going to be 100% WBTC in this case. And what you're hoping is that this then moves down and then trades some liquidity and then maybe enters into ETH or some mix. So this is a really quick example of this that I'm just showing. Once you've created this, this other person has created one of these pools. We're going to go to view position, and I think we're going to do like this. I think his number was this. Oh, and actually his number was 502362. And we go look. This is that one that he created that was Pepe ETH. And this shows that it's basically this is a fully wide pool. There's no constraint limit on this one. This is all the way from 0 to infinity. So this person is a long-term holder. I don't know if there's any liquidity in here. It doesn't look like it is. What we can do is we can go to Uniswap Fish. Uniswap Fish, I think it is. Let me play with this real quick. Got that. This is a tool that was created by somebody to look at different profitability. So if we scroll down here, we can see these are existing pools. So if we look at this pool and think of 9%, let's click on this one right here. This will bring up an example. So this is a pool of $40,000, and it's collecting fees. And this pool, these pools, utilizing this method generates these, and as you can see, it collects and earns WBTC and ETH through this liquidity pool. And this is the range that it's trading at. So we're at 0.035, and it's trading between 0.031 and 0.058. If it becomes less than this range, it'll be 100% ETH. If it becomes greater than this, it'll be 100% WBTC. As long as it's in between, it will continue to collect fees. So this is some of the different things that we look at in the world of DeFi. There's also protocols like Aave. Aave.com. Aave.com is a pretty popular one. Sorry. Browser wallet. Okay, we'll connect the browser wallet. Connect. All right. So we've connected to that. Aave, what Aave allows you to do is it allows you to deposit ETH and borrow another asset. So that is that platform. So these are all things that I find fascinating. If you're wanting to do some research, one of the platforms that I like that people should take a look at is DeFi Llama. DeFi Llama has a wide variety of research. And there's just all sorts of information that you can find on here between various platforms and yield and swaps and all sorts of stuff. DeFi Llama is a really good site. Another website that we are a part of, Lunar Crush. There we go. LunarCrush.com. LunarCrush.com tracks social media. So if we go look at, let's just do Bitcoin. This tracks basically social media and sentiment. So if you're wanting to get a gauge of what the sentiment of something is or a token, it kind of shows you engagement. And you can do this across a whole bunch of stuff. Whether it's, I think might even do stocks now, but like if you're in the crypto space, you want to gauge the engagement of Bitcoin or crypto or whatever asset you're looking at, I would suggest taking a look at Lunar Crush, and you can see the engagement level of whatever you're looking at. So that's that. So like as I was saying with these L2s, there's a lot coming out right now. We have a lot of traction with regards to L2s. A popular one right now, Base. Base is done by Coinbase. What's fascinating about that is Coinbase has recently allowed you to withdraw your ETH or Bitcoin over to Base chain. You can actually withdraw. You can withdraw your Bitcoin or your staked ETH to Base or Ethereum. If you do that, you get a token. If you withdraw your Bitcoin to ETH or to the Base chain, you get what's called CBBTC. And so CBBTC is Bitcoin on Ethereum or Base. And what's fascinating is you can actually send it back on chain to Coinbase. Now, granted, there is a caveat there that, if Bitcoin all of a sudden had a squeeze and all of a sudden you had a supply issue or supply crunch on Coinbase, there could be the issue that they may not be able to pay you back out. Now, whether that happens or not, I don't know. That's a whole different another story. I think we're a ways from that, hopefully. Best practices: don't keep your crypto on exchange. Other than that, so you have CBBTC. A couple other versions of Bitcoin that are actually on Ethereum is you have TBTC. TBTC is another protocol with Bitcoin on Ethereum. And this is actually done by the company called Threshold. So if I go, I think Threshold. Let's see if I can find it. Let's go Threshold Crypto. Okay, Threshold.network. There's the correct site. So Threshold Network allows you to basically bring your Bitcoin over to Ethereum, and vice versa. You can actually withdraw Bitcoin back to the main chain through Threshold. And where is that at? So I like that. I like the fact that you can deposit and withdraw Bitcoin onto Ethereum. And then this is starting to migrate over to some of these second layers as well. A more newer one that is as of recent is LBTC, which is Lombard Staking BTC. And so them too, them I don't know about so much. It is a deposit withdrawal, but I think you have to meet certain qualifications that I may not be open to the US. So something to take a look at. I believe they have some integration with the Babylon chain, which is kind of like an L2 to Bitcoin, which brings me back to Bima. Bima is basically a protocol that we are working with, that we are invested in. And Bima is working to build a stablecoin backed by Bitcoin. So I have a little bit of a test net here. There's a test net coming up. It is not complete yet, but the idea is they'll be able to allow various versions of Bitcoin to be collateralized to mint a stablecoin called USD. And it's not complete yet, but it is in the process. If you want to read more about it, I suggest going to Bima and looking at the docs. I think one of the things that's going to be bullish in this next cycle is I think we're going to see more stuff built on top of Bitcoin, which is kind of exciting. We definitely have a lot of stuff moving forward in California with managing of digital financial assets. And I think, I don't know how many people are aware. Let's see, I put another screen up here somewhere. The ETFs. Okay, so Bitcoin ETFs, there are actually a large number of ETFs that have exposure to Bitcoin. The IBIT, the iShares Bitcoin Trust, you got Van Eck Bitcoin ETF, you got, all of these are potential. So there's well over 10 Bitcoin ETFs that have exposure. And so I wouldn't, if you are wanting the exposure to Bitcoin, but you don't necessarily want to self-custody, you don't understand that part of it, but you still want price exposure. One of the best ways that I recommend, this is not a financial advice, but I like the idea of utilizing a Roth IRA or an IRA to get Bitcoin exposure simply through an ETF such as this, because then if you take profits if you're wanting to get price exposure, that's a way that you can get price exposure without having the tax consequences if you don't. Many people who are coming into the crypto space want to jump on exchange and they want to start trading. The problem is they don't realize that crypto is taxed. Every sell and every trade is a taxable event, and therefore you have to keep track of that. Right now, the wash trading, and waiting 30 days is kind of up in the air. But the thing is that they could do something retroactively. So I think it's best to play as if it's the same rules as treated as if you were buying and selling stock. Some people will beg to differ on that, but I like to try to play it safe in the space. So ETFs are a great way to get exposure. I also have some exposure to ETFs, some of the ETFs. In regards to looking at Bitcoin in the next coming cycle, one of my favorite charts is the Bitcoin bicycle top indicator, and I'd recommend that everybody kind of keep an eye on that. It's kind of done a good job at depicting the tops of the prior markets. And so you can see that we're still here. We're still fairly early. So I'm hoping that we do get to the 100K, and I'm still wearing my red eyes on my Twitter profile until we do that. Anyways, so that is that chart. Another chart is the Bitcoin rainbow chart, which it shows that we're fairly low. So let's hope we get up to here. I don't know if we will make it to 742,000. That'd be pretty nice. And I think that's a good tour today. Just to take it back, one of the things that we can look at, let me take this address. So one of my favorite things is a Sankey chart. This is in regards to, this is like for tracking wallets, right? So one of the things I like to look at is money flow. So if I throw a wallet address in here, we're just going to look at some random wallet address. I can go look here, click on money flow. This will show me connection because we're on graph. Maybe there's none. Let's go Sankey. I like the Sankey. Why is this not coming up? All right. So this is a Sankey chart. And this person may have not had any transactions in the last week or two. So let's bring it back to 2023 and apply. This is a boring wallet. Let's go look at Tether. All right, let's go look at a better wallet. Let's grab a better wallet address. I don't think that one had much activity. We'll go have this person's wallet address. Copy. So this is the wonderful thing about crypto is how easy it is to go out there and learn, because everything's public and all you have to do is go out there and do the research and watch what's on chain. Be careful though, because sometimes you could be watching something that's a scam. All right, so very limited on transaction volume. We can actually zoom this out a couple. This will take us to the left further, and this one will take us to the right further. All right. So this brings up an interesting diagram. This shows us the flow of ETH from various wallets, concentrating into this wallet, and then over to this wallet, into this wallet, and then it shows us a distribution of where the ETH is sent to. So I always find it funny because I will find wallets that will export their crypto from Coinbase, and then they will hop to another wallet and then do another hop or something like that, and thinking that gives them privacy, and then come back, And realistically, it's all traceable. So yeah, it's kind of fascinating, and I don't think enough people understand that how traceable crypto is realistically. And so this is why when you hear somebody like Elizabeth Warren talk about money laundering on crypto, I kind of laugh because of how traceable it is. Especially Ethereum, where it's an account based, or Bitcoin is a UTXO model. So it's a little bit more complex to track, but it still can also be tracked. One of the important things to note here is you have all these different accounts, right? Well, it was previously that a lot of times people would treat their accounts as a universal wallet. So they would say, hey, this wallet, if I spend in this wallet, it's the same as if I spend in this wallet. And so they could use a cost basis over here for over here. But that is actually changing. So we're going to an account-based model as of next year. And the exchanges will be doing first in, first out. And what I think that is going to help alleviate is some of these pump and dumps, right? If I currently have two accounts, and I can buy this account but then sell this account right now with universal wallets, as if those are two accounts are from the same segment of fund, right? But by separating and saying that each address is its own account, if I intentionally buy from here or sell from here and then do the opposite over here, right, I'm potentially wash trading between two different accounts, and then that can end up starting into legal issues if it's intentional. So I think we're going to see a major crackdown on the pump and dumps in the crypto space, which is good and healthy for this space. As far as I'm concerned, it's very legitimate space. And so I like to see things, be done in a healthy manner. But anyways, so that was a deep dive today on DeFi. Take a look at, go out and do your own research. Hopefully that was somewhat entertaining. I wish us all luck on the election. I think we're going to see the Bitcoin ETF start to take off. I think we're going to see more institutions over the next year, probably starting in 2026 or maybe in 2025. But I think highly in 2026 that we'll see more institutions soliciting their Bitcoin ETFs. They'll probably start with their wealthy clients first. We're going to see some token unlocks happen probably over the next couple of months, if they haven't already happened. We are seeing, because of how transparent crypto is, there is some attention to privacy coins. But I have, reports would suggest that regulators are tightening down on privacy coins. So there's an ongoing tension in regards to privacy versus regulation. Quite frankly, if we can force politicians to also be public and be transparent on the blockchain with what they're doing, I'm all for it. I believe them, but we do need to watch out for safety of individuals. So if you have your NFTs, categorize those, put those in a separate wallet, keep yourself safe in regards to that. But I think that we continue to see adoption and trends continue to grow in the gaming space. Web3 gaming didn't really take off as much as we had hoped. And I think that's because a lot of people are just really it's a transition. Unfortunately, Web3 is not ready for everybody yet. I think we will continue to see that. I think we will see Web3 in the background. And then, one of the things I experienced earlier in the year was a SIM swap. People have phones. A large portion of people do crypto on their phone. Your phone number is not safe. You don't own your phone number. And so if you become a target, you could potentially lose that phone number and lose the crypto on that phone. And so I'm a proponent of not using your phone for crypto or for anything financial for that matter, because I've seen the effect, and I know people who have lost stuff from SIM swaps, and that it's a real issue that we need to figure out as a society on how to deal with. If we are going to go into a digital space and where we do financing on our phone and in the digital world. Anyways, I hope somebody enjoyed that discussion and the presentation on DeFi and crypto. I'm always happy to answer more questions. Hopefully, you guys enjoyed a little bit of my views and opinion and on crypto. And next time we'll have a lot back. Anyways, if you have, if you are a startup or you are looking to invest in DGB, or not invest, but if you're looking to talk to GGB, reach out to us. Anyways, thank you much. Have a good day.